Well, I think your question is, I sort of take issue with the premise of your question that these banks are somehow ripping off their clients and being evil entities and not passing through their cost savings or higher interest rates in the form of higher rates on deposits. The real question you should be asking is, why are depositors willing to accept these low interest rates on their deposits? That's the real question you should be asking. After all, the depositors could just vote with their feet, right? They could say, there's all sorts of options and choices. There's millions of bonds out there. There's all sorts of investment vehicles. You could move your deposits into another country, into another bank, into the markets, into real estate. There's all sorts of places. To say there's no options, I think, is a bit absurd to make that claim. So that's the real question. Why are depositors willing to accept such low interest rates? And many depositors, basically 0% interest rates on the deposits with banks. They must feel there's some sort of benefit to it. There must be a reason for them to do it, other than you just think they're stupid. And that might be your reason, that banks need to take care of these poor depositors who don't know what they're doing. But I think the real issue is that ordinarily what a depositor would do is look to bonds and bond funds and basically say, well, listen, I'm going to take my money out of deposits in the bank. I'm going to get a higher return on bond funds. The problem there is, if you look at over the course of the past year, as you well know, most bond funds did not exactly cover themselves in glory in 2022. So you might think, I'm going to get a much safer return, a higher return than I get in my bank deposits. I'll put it in a bond fund. But most bond funds saw their asset values go down about 15% in 2022, and that frightens them. So leaving the deposits in a bank at very low interest rates, or basically zero interest, looks pretty good in comparison. So I don't think it's a question of the banks refusing to pass on their savings or high interest rates into deposits. It's just not the way the world works. Everyone tries to maximize their revenues and minimize their expenses. Every business in the world tries to do that. Banks are no exception.
Octavio, that said, it feels as though there's been a difference between the US market and Europe. In the United States, it feels as though market mechanisms have come into play. On the back of the SVB story, it felt as though there was deposit flight from some of those regional and smaller banks, which meant there's more competition for deposits. So there was a natural mechanism now where those banks have to increase the offer that they have on savings rates and deposits to try and attract the money to stay invested or stay on deposit at the bank. Versus here in Europe, it feels more as though it's a game around optics. There's been a lot of reporting in the press around the savings rates versus the cash rates, and it feels as though the banks have reacted to some of those negative optics. And of course, there's a big stick approach where windfall taxes can be adopted, like in Italy. Can you just comment on the politics here and how it's different between the two jurisdictions?
Well, I mean, you're right to point out in the US, in a certain segment of the banking market, there's been greater rates paid on deposits. And overall, that's certainly the case. It's just the fact is the interest rates on loans have gone up even faster. So if you look at the large US banks in the most recent earnings, their net interest margin went up very, very significantly. So you could make the same argument there, that basically the large US banks are not passing through these increased interest rates they're getting on their lending activity in the form of higher rates and deposits. They are in part, but not fully, and that's why we've seen net interest margins at European banks and US banks basically go through the roof in this quarter. And it's really been about the stickiness of the deposits. Now, in the US market, we did see some deposit flight, basically from sort of the mid-tier regional banks to the larger banks. So banks like JP Morgan, Bank of America basically saw an inflow of deposits coming from those smaller regionals. The regionals had a hard time. And it was the problems we had with things like Silicon Valley Bank and some of the other banks that were under stress in that market segment. So they're the large depositors, basically commercial depositors, have pulled their money and put it into the larger banks. But the retail depositors tend to be very, very sticky. There's still a lot of non-interest-bearing accounts in the US, but basically getting 0% interest. So I don't think there's a very large difference between the jurisdictions there in terms of US and Europe. We're seeing basically a similar kind of story in net interest margin play out in both banking sectors in Europe and the US. Net interest margin has gone through the roof in both markets. So we've seen very, very large profits on the back of that in the banking sector in both regions, in Europe and in the US.
Octavio.